Hello, chart watchers, and welcome to this Friday, June 15th Market Watchers live show with your hosts, Erin Swenlin, and guest co-host, Arthur Hill. For those of you joining us for the first time today, welcome to the show. Hopefully you'll become a regular. And for our regulars, welcome back. So let's go ahead and take a peek at what's been going on in the market so far today. And as you can see, everything's down pretty much today. A lot of it word on the China tariffs and what's going on with that seems to be affecting the market somewhat here. And as you can see, Dow is down currently at 24,921. S&P 500 is down almost 15 points. We can see the Nasdaq down almost 35 points. Russell 2000 is also rising okay. We're getting a little bit of a decline right now, down 6.38 points. Treasury yields are also down today, reading currently at 2.91%. UUP is just slightly lower right now, down 3 cents. And we can see with USO, big decline right now. We're seeing it come down to test some support at $13. Currently reading 1307. Gold is down for the day. We're looking at GLD down over $2.14 right now. Got the mix, of course, is low. Not seeing much of a rise today. Current 5.3. Consumer staples is right now the leading sector, and we can see that we're getting a little bit of a rise out of that. In that particular sector, in consumer staples, it's the tobacco index. It seems the industry that seems to be doing the best. And we can see it's getting ready to hit some pretty important overhead resistance. General Electric is the most active in the Dow right now, and it is continuing lower. It's now moved below my co-host in today, Arthur. Thank you so much for coming in and filling in for Tom.
Hi, Erin. It's great to be here. Thanks for having me on.
Yes. What do you think about all the markets moving down right now?
Well, it's probably part of the corrective process for some groups and more of a continuation of trim for some other ones, like say some of the banks. They're just kind of continuing lower.
Yep. Then we'll have to see how they can, if they're going to resuscitate here soon. But yeah, when you see a decline in market, even just over a day, you're generally going to see a sector like we are today, consumer staples, leading so far. All right. Well, how about we get started? And Arthur, can you go over our weekly schedule and agenda for us?
Absolutely. So here's what we got coming up this week, or next week, actually. Erin's going to do a workshop on momentum indicators. So be sure and tune in for that to catch the fastest moving stocks. Grayson is going to be on the 20th of June next week. That will be a Tuesday. And then Julius de Kempenaar will, of course, be talking about relative rotation graphs. So you can separate the leaders from the laggards.
All right.
As far as today, we're going to start with the seasonal doldrums. That'll be my segment. I'll go over some seasonality charts for you with stocks and bonds. Then Erin and I are going to look at some chart breakdowns, and there are a few of them out there today. And we'll see, what might have foreshadowed it, if we should have been expecting it, and maybe what to do now. Then we're going to do the 10 in 10. Erin and I will be splitting that, I believe. Are we?
Oh, I'm going to just give you those symbols.
I'm going to be doing it all. Erin has pawned it off on me, and I will gladly do it. Yes. So that'll be 10 in 10, 1 minute per. And we're going to start off with Mylan. So I'm looking forward to that segment. It's always a bit of a challenge. Then Erin's going to do a sentiment update. And I heard her oohing and eyeing when she was looking at the data. So that should be an interesting update.
Yes, absolutely. We had a really high reading on one of those sentiment indicators. So I can't wait to show everybody. It's very interesting.
All right. So hold on. Don't go away. And Erin, why don't you take us through the headlines for today?
All right. This will be fun to do today. I haven't been able to do the technical headlines. So let's go ahead and get started. I am going to just leave a S&P chart up there for you. Let's see. All right. So again, it's the S&P 500 is going lower. We're down 0.4%. We were down lower during the day. You can see we got almost up to down to 2760. Our intraday low right now is 2761. So the market is doing that correction. And honestly, I know there's lots of talks about the China tariffs and how that's really affecting what's going on today. Really, we were already rounding off on the S&P and on the Dow as well. And so, we did get this decline today and probably was exacerbated a little bit based on some fears globally. But, this was already in the making. So I do have to agree with you there, Arthur. And at this point, we're looking at a support level at these tops that we saw back in May. I've been looking for some neutral action. I've been looking for some sideways action on the market since we did start to get this rounding. Also, we were seeing the PMO starting to turn down. You'll notice our volume today is quite high. It's going to be quite high. We do have quadruple witching going on today. So usually you'll see a lot of high volume, and generally you don't see a lot of volatility. You usually end up seeing, mostly unchanged, even though you have all of that volume just from the covers and in the options market. So we're looking at a decline a little bit deeper than what we thought. So there probably are some tensions and concerns about what's going on with China. We do have a couple of economic reports that I'm going to let you know about. And just in general, we've been watching economic data picking up. But today we had a couple misses here on the industrial production report. As far as production go, the market was expecting a 0.1% gain, but we ended up getting a minus 0.1% decline. In manufacturing, there was an expectation that it was going to move up 0.1% as well. But today it came in at minus 0.7%. So that was quite a miss. And as far as capacity utilization, the expectation was 78%, and we got 77.9%. So we're seeing some decline in the industrial data, and that might be causing a little bit of issue right now for the Dow. Consumer sentiment level rose from 98.5 to 99.3. And that's pretty much the main economic news for us today. I'm going to go ahead and, like I said, I want to give you an update on the 4 major indexes. So let's go ahead and I'm going to move us over to that. So, all right. So I wanted to take a quick peek at the market summary too. We haven't done that in quite a while, and I want to go through what the ETFs are doing at this point for the foreign ETFs that we have, the industry indexes as well, taking a peek at those. So right now I wanted to start with those international ETFs. And we can see that right now the only positive international ETF currently is India. And it is up, 0.22%. The rest of the international ETFs are lower, with South Korea actually taking the biggest hit right now, down over 2.4% right now. So the China ETF also down, it's down 1.68%. Let's go on to our predefined alerts, because I think that's an important part to look at as well. Right, where are my predefined alerts? There we go. So these were the big news items. These are alerts that we set up in StockCharts. You can set up your own alerts, but we have predefined ones. And whenever we get information and one of them triggers, you'll see the alerts put here in our predefined alerts tile, and you can get to that as simple as using that drop down. But as we can see, industrial sector had a bearish MACD crossover, as did the materials sector, and the Dow crossed, of course, below 25,000. Let's go ahead. I'm going to look at the Dow chart for us here. And actually, I'm going to pull it up where I have it already annotated. There we go. So as you can see, all of the EMAs were going the right direction. We were seeing this little bit of a trading range going on. And like I said, we were already rounding off. As of yesterday, it was starting to look pretty weak. But today we've now pretty much opened below that area of support, which I was looking at as that May high. We're heading further down. We're now actually looking at a last price below the 20-day EMA. So I was looking for a little bit of a pullback, more likely consolidation, but we're actually it looks like we're going to see a bit more of we're going to see a pullback. I'm not looking for a correction down to, 23,000, but certainly it looks like we're getting ready to go down and test that 50-day EMA. And should that fail, for me, the next area of support is going to be that May low. So we'll just have to see. It seems like there's a lot of difficulty right now trying to get up back to those all-time highs that we had. Yet, when you look at the Nasdaq 100, it's already hit these all-time highs and was continuing to hit all-time highs until so far trading today. And we can see the Nasdaq 100 is down almost 0.5% right now, but it's got this top back here in March, and I think that'll hold up as fairly good support. But if we see some serious deterioration continue in the S&P 500, I would start to get a little bit more nervous about the Nasdaq 100 failing at that particular area of support. I would then look for support here at this small gap you can see over here at 7,100. I think that would be your next lower stop. And when you look at the PMOs here, they aren't really particularly overbought, in my opinion. They normally do run between 2 and -2, pretty much all of the indexes as far as their PMO range. So technically it is rather overbought right now, but we've seen some higher readings spike out, and it makes sense. We had this parabolic rally. So we did end up with a fairly overbought PMO. I think it would be able to accommodate more upside, but it really is starting to make sense that we're going to see a bit of a pullback or even consolidation just to start bringing these momentum indicators back down and set them up for another rise. All right, let's go back to our predefined alerts page, because I did also want to look at the sectors that we had here that were leading or having problems, I should say, in the predefined alerts. And that was the materials and the industrial sector. Well, we know that the industrials are really hurting today, more so than what we're seeing on some of the other broad indexes. And again, some of this was worries about, what's going on in China. But again, when you start looking at these daily charts, you can already see that weakness that had already started to appear. And in the case of XLI, this is the industrial sector spider, it hit that overhead resistance at this top back in May, right around the top that was back in April, and it started to pull back. And now I think you could say loosely there's a double top forming up here, and that would imply a drop size of the pattern. And so we could see a test all the way down here at that 200-day EMA, or maybe further down to that 7150 level that we have back when we failed the 200-day EMA at the end of March. We're nearing a PMO sell signal here on XLI, and I'll be watching that closely on our sector summary. And then if you call the other one that was having difficulties today, XBI, also had a MACD negative crossover. As you can see, this is a good example of why the MACD and the PMO are different. We're not seeing a negative crossover. And in fact, on the material or the biotech ETF, it wasn't, no, it's XLB.
Yeah, it was XLB.
Thank you. I realize as I'm looking at it, this chart doesn't look right. Okay. Let's get back here and make this a little bigger for everybody. So yeah, as you can see, the PMO and MACD don't necessarily have the same crossovers. It is calculated differently. And the MACD, if we looked at the PPO, there might be a different sign there. We might be seeing not quite the crossover, but I'm not so sure about that. As you can see, we do have the PMO that is declining though in the materials sector. And, we're getting this pullback. I don't see support here. I mean, you could make a case for the 50-day EMA at $59 to be an area of support. But really the next area I would say of stronger support would be right here around that 200-day EMA, 57.50 at this May low over here at the end of May. So I don't think
even a wedge may be forming there.
Absolutely. Exactly. We could draw in a rising wedge as well, another bearish pattern. So at this point, I don't think industrials and materials are looking too good at this point. And, the expectation at this point, wait till we see sentiment. Things are just not looking too good. We were already experiencing some weakness, and now it does seem to be kicking in more, getting a little bit of acceleration to the downside. Did have a few upgrades and downgrades. I'm going to pull up for you. IHG was upgraded today, International Continental Hotels. We're not seeing much out of it. In fact, I do have a PMO sell signal currently, but you can see the PMO has just been rather flat. Acceleration has been rather neutral. When the acceleration doesn't change too much, that's when you're going to see, obviously, momentum flatten out. I like looking at this chart though. On the upgrade, we are seeing it testing this level at $66. And you can see how strong that level of support should be. And with the upgrade with, a scooter that's still looking very healthy, I think this one could offer a little bit of opportunity, especially, it's already pulling back, even though it was upgraded today, to sit on this area of support. So I think that might be an interesting opportunity. The other upgrade I wanted to look at, Gardner-Denver Holdings. And we can see it's forming a reverse flag. So, even though we got this upgrade, I might be a little bit, we're hitting this area of support back here from that April low. And the PMO is falling, but it is starting to get in oversold territory. I'd really want to wait until we got this reverse flag not there anymore, meaning that we'd get a breakout above that pennant or that flag. You can see it right here very clearly in the thumbnail. A nice flag, and it is reacting as you would expect. You want to see on these reverse flags, you get the flagpole, and then you want to see just a slight, a flag that sort of, moves a little bit upward here in the slope on these rising bottoms trend lines. So it really is shaping up to look like you're pretty much your typical reverse flag, but we are holding on to the support level, and we did just get an upgrade for Gardner-Denver Holdings. Had a couple of downgrades. I thought we'll look at ATI. And here you go. On the downgrade, certainly not helping. Gap down. Sitting right on that support level that we saw in May. With the downgrade, we broke down below that 50-day EMA. I mean, this is pretty much that last area to cling to as far as support for ATI. I would be of the mind looking at this PMO, which had a failed positive crossover and started to turn lower. That does bode not well for ATI. So I'm not looking for that area of support to hold, mainly just because everything seems to is getting weaker. And then of course there is that new downgrade that we got. One more, and then I'm going to hand it back over to Arthur to do his seasonal doldrums. All right, Motorcar Parts of America, MPAA, also was downgraded today. And we can see that it's down 4.5% currently. It's still, the intraday low is higher than yesterday. I guess you could make that as one nice thing on this chart. And it is sitting here at these April-May lows. And that could form an area of support. But honestly, when you look at a negative configuration of these EMAs with your fastest on the bottom and a 50-day EMA that has that kind of margin below the 200-day EMA, you really should start expecting bearish conclusions, despite support, despite a bullish pattern. And when you look at a PMO like this with the sell signal and now hitting readings below zero, that is bad news as well. So that will conclude our technical news. And Arthur, I'm very excited again to have you here to co-host with me. And I am looking forward to your presentation. So
All right. Well,
further delay, let's do it.
Let's move to desktop number 1. And there's nothing there. Oh my gosh. Ah, there we go. All right. So you should see the free tools page at stockcharts.com. Is that correct?
Yes, that is correct.
That is correct. Okay. And look at the banner right there. We have ChartCon 2018. Erin and I, of course, will be presenting live from Seattle on August 10th and 11th. So you can still register and watch from the comfort of your own couch. You can have a baseball game on in the background if you want. I wouldn't mind. I'm going to start off with a seasonality chart. I know Tom does a lot of seasonality work. I do it periodically, and this is a good time to do it because basically we're entering the weakest 4-month period of the year for the S&P 500. Usually you hear of the 6-month cycle, go away in May, sell and go away in May, basically, and stay away for 6 months. But if you really look at the data, you'll see that it's really just 4 months that are exceptionally weak in the stock market or the S&P 500. So when you open up that seasonality chart, this is what the default's going to look like. You're going to get 5 years with the Dow. And I'm just going to go and change that symbol to the S&P 500. And then I will open up the slider to 20 years. And this is going to go from 1999 until 2018. And you can move that slider if you want to see a period that starts earlier. It'll have a little overlap from 1990, say, to 2009. But I'm just going to stick with this period that we have here, the last 20 years. That's enough data for, even though there's only 20 data points, 20 months in each months over a 20-year period. But the first thing we can see is that this period, right, you have 55% chance to be up in June or
Arthur, we can't hear you. I think he might have had a issue with his Wi-Fi. We'll try and get a hold of him in the background. Okay, I'm going to go ahead and share my screen. And I always have something to talk about, guys, so no worries there. All right. So I'm going to go ahead and just look at a few more charts. Hopefully we'll get Arthur back here soon. He does come to us from Belgium, so we have to have a little patience if we have some technical issues in that way. But I'm sure he'll be back soon, and we'll get him restarted on his seasonal doldrums. And so I wanted to go, since I have the floor again. I did have a few more. I had 2 more downgrades, so I figure I'll just go through those until he gets back. One was Splunk. I know we've had this one requested for 10 and 10 quite a bit. And on the downgrade, obviously having a difficult day, down 3%. And it's sitting here trying to test the support area at about 110. That seems to be the next area, very important support. Plus you can see that the 50-day EMA is also lining up with that. So, this could be that spot for Splunk to turn around. However, I'm looking at this PMO. We got that bear kiss, that fake out, head fake with that PMO buy signal, and it sucked people in, and now we're seeing the big decline. On balance volume was looking okay here, and we do have a very strong scooter. So there is certainly that possibility that we could hold that support level at the 50-day EMA. But if it's going to happen, we need it to happen about 110. I would get a little bit nervous if we start seeing it drop certainly below 105, but below this low that we had back in May. The other one that we had was AEG. All righty. And this one I think is pretty ugly chart when I look at this PMO. The only thing you could say that maybe would be positive is that maybe that this -2 reading is not that is oversold. But looking at these higher readings here, I'm not so sure. So what I usually do when that happens is I just take my time period out just a bit. And when I do that, I can start seeing what the actual range tends to be for AEG. And I'll annotate to show you how I can do this. This is a really good practice when you are studying the PMO, the PPO, because it is also an overbought, oversold indicator. You want to know what the regular range is so you can determine what is considered overbought and oversold. And so when I look at this, I'm trying to connect as many of the tops as possible. I think we can go down even further, down to this level. I can't tell exactly what that turns out to be, but it's right about probably 3 and -3.5. So I'm going to bring this up. They are symmetrical in general, and you can see that that is the case. So you can really tell where your overbought and oversold areas are. So this reading is oversold for AEG, and it is continuing lower. When I'm looking, actually, I'm looking at this long-term daily chart. I think that the information gets interesting as well. When I look at this chart, I see this giant reverse head and shoulders, and there's your neckline. And the minimum upside target would have been the length of this pattern, and that would be $3 to $5.25, $2.25 from the 525 area would give us 750 as a minimum upside target. And look what we did. We came so close to hitting that 750 level. Chart patterns are very handy. They don't always execute as expected, but typically you do get at least part of the expectation to come out that way. All right, I'm going to go take a look and see if we've been able to get a hold of Arthur and what is going on with that. All right. Also notice the scooter is really low here. We're seeing very low readings on AEG. AEG, we're talking about it right now in case you joined a little bit late. It was downgraded today, so I thought that would be an interesting one to look at. All right. Since I have your undivided attention, I am going to, let's get rid of this. You're getting your early peak here. Might be interesting to look at some of our short-term indicators for decision points. So I figure I'll just go over a few of those. The ultra short-term indicators, I use these when I say ultra short-term or climactic. It's like candlesticks. They're readings and patterns that you look at and only really make conclusions over the next couple of days. Now, sometimes these readings will turn into more. For example, if you have there's some highly climactic negative readings that came in here at the beginning of April. And typically when you've been on a downtrend, you would look at these climactic readings on the negative side as a possible exhaustion. And so what you do is you look at that for the next couple of days, what you expect to see. And in the case of this large bar, you can see we're already on a decline. So I would have looked at that as a selling exhaustion, and you would expect over the next day or two to get a rally. And especially when these are combined with, for me, with the VIX, this is an inverted VIX scale, because again, I'm using this like a candlestick, these breath readings as climactic. I'm looking for just the next day or two. And when you get a real stretch, when people get super nervous, you have these very climactic readings to the negative side. That suggests a bullish condition for the next day or two. And so that's one of the reasons I invert my VIX. And I know some people love it and some people hate it. But I think it's important to set up your charts so that intuitively it makes sense to you. Because I do have one of my sentiment charts and it's reversed in that the lower readings are not considered oversold in terms of what I'm studying. It's actually overbought. So it can get kind of confusing. So I like to invert when it's possible so that I can use it as an overbought or oversold indicator. So as of yesterday's information from the 14th, we don't get this information till the close, of course. Not climactic readings at all. And we can see the VIX has really been hovering right around its average, but on the top side, which of course implies that things are good. All right, so we've got it traveling above. We're looking at some fairly strong, this means we've got people very complacent because it gets lower on top. But if it gets too low, people get a little too complacent. That's when you start looking for those reversals. So right now, I've explained this whole chart. And of course, the last reading was not very interesting. I thought these negative readings that we got the day before yesterday on Wednesday, which I wrote about, were interesting in their climactic nature and coming after this decline on our readings to the positive side and then having this negative one pop like that tells me you're looking at a buying exhaustion, or in this case, because we're looking at that last negative reading, I would call that a selling initiation.
I'm back, Erin.
Oh, good. Okay. Well, I know everybody's much more interested in what you have to talk about right now, but I did go through some of the DP indicators, so that worked out.
Okay. Yeah, I'm really sorry about that. I guess that, cable going under the Atlantic, something happened to it. Maybe a lobster is gnawing on it or something. So where did we cut off? Where should I start back up?
That chart right there. So we were just looking at that seasonality on the Russell. I think that was what everybody saw last.
Okay. So what I was going to show was you can even do a seasonality for the Russell, and you can also do a comparative. So you could do colon dollar SPX, and you could see when the Russell 2000 outperformed the S&P 500. And so that would tell you when small caps outperformed large caps. And I've got you don't do the colon here. Sorry, I'm used to the sharp chart. You just type it in on the other side and click go. Sometimes we get on automatic pilot with these charts. We've been using them so long. So there you can see how often the Russell 2000 outperforms the S&P 500. And June is a big month for small caps. And I believe Tom Bowley was pointing that out in late May. Now you can see here, July is the weakest month for small caps. So that again kind of argues for small caps taking a breather at some point during the summer. This isn't a timing mechanism. You always have to look at your price charts to get that final confirmation. Now, the other one I was looking at was U.S. Treasury bonds. And we do a Treasury bond price that goes back dozens of years. And we can go back 20 years to see how Treasury bonds performed. And I was quite amazed to see how Treasury bonds performed in July and August. The best months were July and August. And that kind of fits with maybe money was moving into these safe haven assets and coming out of riskier assets like stocks. So that kind of goes hand in hand. And you can see June was a relatively weak month for treasuries over the last 20 years. So this is something to keep in the back of your mind. Don't put this at the front of your mind and say, this is going to happen. Keep it in the back of your mind and then look at the price chart. And if price chart starts confirming what we might see here, then that kind of adds some more weight to that confirmation. So I've got some charts here, and I'm going to look at 5 sectors basically, because I think that these 5 sectors basically control the market. If you go to the SPDR website, excuse me, you can see the different weightings. And the top 5, technology 26%, financials 14%, healthcare 14%, consumer discretionary 13%, and industrials 10%. So this is the lion's share of the market. When you're doing broad market analysis, as far as I'm concerned, you can pretty much forget about these sectors. These 5 are the ones that are driving the S&P 500. Doesn't mean you can avoid, you can still, invest or trade those sector SPDRs, but as far as broad market analysis is concerned. So looking at XLY, nothing wrong here. It's definitely leading. Amazon is leading. Retail is leading. The XRT hit a 52-week high. So this is one of the strongest. All right. That's a plus for the market, definitely. And that was 13%. Then you look at XLK. All right. You have this 10% surge, kind of a pennant wedge, another breakout, maybe another pennant forming, and you get a breakout there. So classic technical analysis would say you would apply this 10% move to the low of the pennant there. So say 69, and you add 7 to it. That takes you to the mid upper 70s if this move extends. All right, but clearly an uptrend here in technology, and clearly one of the market leaders, if not the market leader. You had 5 technology-related ETFs hitting 52-week highs this week. The cloud computing, SKY, SKYY, the internet ETF, FDN, the cybersecurity ETF, HACK, HACK, the software ETF, and the semiconductor SPDR. So a lot of strength in technology. So those two are doing just fine, and they account for 39% of the market. But then you get to finance, and something is just not quite right here, because you can see that finance has been declining. And you had this big advance here, and a big advance, of course, deserves some sort of a correction, but finance just can't seem to get the bounce going. And there's a clear resistance level there at 28.5, I'll call it. And we need to get a breakout there to put finance in harmony with consumer discretionary and technology. And then we've got an argument for the market to accelerate higher maybe. But as long as finance remains in the doldrums, that means the argument for the summer doldrums holds water, I think. The other one, well, before we, I wanted to tie this into finance. We had a big move in the Treasury bond market over the last 2 days. Now, the long-term trend for Treasury bonds is down, and that means the longer-term trend for Treasury yields is up. And the banks seem to have a negative correlation with the Treasury bonds. So they like it when Treasury yields move up and Treasury bonds move down. And this little upturn in Treasury bonds, I think that the banking group does not like that, because that meant a decline in Treasury yields. Now, we haven't reversed the long-term downtrend in Treasury bonds yet. We have a little surge. This was the Italian vote fiasco thing. And then we pulled back kind of like with a flag. And now we're breaking out of that flag, and that sets up a challenge. And if we break 123, then that would reverse the downtrend in Treasury bonds. That would show money moving into safe havens, and that would support a bullish seasonality for July and August going forward. So that's something to consider. And I think if Treasury bonds break out, that would be net positive for bond proxies like utilities and REITs, and it would be negative for banks. So the fourth sector here that's important is industrials. And so I think industrials is still net bullish. All right. The way I see it is you had this big surge, and you did break the wedge line, and you exceeded this high. Even though you moved back down, you did exceed it. All right. And you had a little flag, and we broke out of the flag, and now we're getting cold feet. And I think this flag low basically holds the key, because if we break this flag low, then we've negated the flag, obviously. I think we've also negated the wedge breakout, and that puts a key sector in the negative. And if industrials and finance go in the negative, at the best, the market will probably tread water, I would think. So I'm watching 74 here on XLI. And there's a few stocks that show similar patterns here. You can see Honeywell's got the surge and this flag, and I put support at 146, but it's still a bull flag, maybe a little ascending triangle even, but a breakout at 152.5 maybe would be bullish there for Honeywell. United Technologies, a similar pattern, a lot of correlation here, obviously, a big surge and a flat consolidation and looking for a breakout there at 129 to continue higher. So industrials is kind of like still bullish, but you got to watch closely because it could change. Now, healthcare is also bullish because healthcare had that flag breakout in early June, and it continued higher this week. And it got some help from big biotechs of all things, because big biotechs, man, you look at Celgene and Gilead, they are just down in the dumps. But there are some other ones that are picking up the slack in the big biotechs. But as far as healthcare, I think this breakout is bullish. This becomes the first support zone. Erin's noted before that broken resistance turns into support, and there it is. And to turn bearish, I would look at a close below 81. So here's IBB, big biotechs, and a lot of support there. Finally broke out, and I think this breakout is bullish. Maybe we get some backing and filling, but the breakout is bullish, and I'll put support there around 106. Now, there's some strength definitely in other areas of the healthcare sector. Look at healthcare providers, 52-week highs throughout May and now June. So a lot of strength there. And medical devices, same thing, 52-week highs throughout May and June. So a lot of strength there. It's just, you know, some other places of healthcare that have been weighing, like big pharma and big biotechs, basically. And I'm going to cut this. Should I cut this short or should I keep going?
Oh, definitely keep going.
I'll definitely keep going. Okay.
At least 8 minutes left.
Okay. Okay, good.
Yes.
Well, I had some stocks that I just wanted to go over because, you know, it's important to focus on what is working in the market. Erin and I are going to show in a minute what is not working with the chart breakdowns, but there is some stuff that is working, and I'll give you 3 guesses, and the first 2 don't count as to which sector they're from. Well, technology, obviously. This is global payments. Look at Visa and MasterCard and PayPal, very strong stocks. I can't tell you exactly what global payments does, but I'm guessing they're in payments, and they are definitely in the technology sector. But look at this, a triangle consolidation within an uptrend and breaking out. And that was a 52-week high this week. So clearly a strong uptrend, and I would expect this one to continue moving higher. Maybe there'll be some noise and some backing and filling, but noise is all part of the game, I think. You know, we kind of got to separate the wheat from the chaff, basically. And this is, you don't want to look at the chaff and you don't want to look at the noise. Try and look at the bigger pattern, the bigger trend at work. Akamai Technologies. All right, this is one I've been following in Arch charts. A nice cup with handle taking shape. I'm sure this was featured on IBD. And there's the breakout, and it's hitting 52-week highs. And this one is already is part of the cybersecurity ETF, HACK. As far as the targets, you can see the distance from the bowl bottom to the rim high there. We'll call it around 10 points. So that would target a move to the upper 80s. Don't worry, I don't have that many chart pages to show you. You can see I've got dozens of pages there. Another one in the cybersecurity, but this one's kind of a wild card in the group. Just listen to an interview with the CEO and you'll see why. He's a bit of a wild card. And I think their technology might be a bit of a wild card. But they're part of this cybersecurity group, and they did surge to a 52-week high, FireEye, came down with the wedge, and tested support and that 50% retracement and trying to turn back up. Getting a little bit of selling pressure today, but I'm watching this zone here to see if we can clear 1775. I think we got a clean breakout and open the door to new highs. But this is a strong group, this cybersecurity group. Here's another one, Proofpoint. All right, just working its way higher, a little bit of a wedge, and then a breakout. and it's holding good today. So I'd expect this one to move to new highs. And you notice I have RSI on most of my charts, and that's because I pretty much look at two things. I look at the trend, and then I look to see if it's overbought or oversold within that trend. And I'm pretty much only looking for uptrends. And if I'm only looking at uptrends, then I'm only looking for short-term oversold readings, because that tells me you've had a pullback in the uptrend. All right. And when you get into that 30 to 40 zone for RSI, that means you're becoming short-term oversold and a pullback. Put some lines if you want to draw a pattern and look for a breakout or look for some sort of bullish catalyst. You can see right there was a big up day. It's not candlesticks, but maybe it was a bullish engulfing. Motorola Solutions. Now, I can't even tell you what they do. I know their technology. I know Motorola makes phones, but it really doesn't matter because the chart is what really matters. I mean, you look at this chart, do you need to know what it does? It's a triangle consolidation. It's a long-term uptrend, and it's a breakout. So this one is looking positive. Sometimes the more you know about a company, the worse off you are, I think. You know, you start thinking about dividends, you start thinking about long-term projections from the CEO. Look at the chart, because the chart tells you where people are putting their money to work. Here's Corvo, and this one was highlighted in Don't Ignore This Chart a week and a half ago. And this, of course, is an Apple supplier, and I wouldn't even listen to the Apple supply rumors. I would look at the chart. All right, it's been a very choppy chart. But look at that big surge and then this nice flag, and now it's breaking out. All right, it looks like it is heading to new highs, Corvo. Here's a semiconductor stock synopsis and a big wedge, and you broke out of the wedge, and then we had a smaller wedge, and we're breaking out of that smaller wedge. So we're kind of chopping around after this breakout. This is just noise around the breakout right now. You know, I would put support there at 86 and not be too concerned unless it moves below 86. It may seem like a wide stop loss, but I found in general, wider stop losses prevent whipsaws in the beginning. Once your trade turns profitable, then you can do a trailing stop. Here's another Apple supplier, Skyworks Solutions, all right, showing strength the last 2 days. Yeah, the chart is all over the place, but I look at this advance, and it looks like a flag, and we're breaking out of the flag for the second time. So Skyworks looks like it wants to move higher as well. Now we move over to trash. Republic Services, they, of course, collect trash. They're in the waste disposal business, RSG. And they have a cup with handle. This is not the most exciting stock. We're moving out of technology. All right. I put them in XLP. I'm not even sure if they're there, but that makes sense to me because you always need to have your trash removed. But, you know, cup with handle is a bullish continuation pattern. So you get some challenges at resistance. There's the handle, and you're breaking through resistance and hitting a 52-week high. I mean, if there's one piece of advice that I could give you is that 52-week highs and long-term uptrends, those are the things you need to see on a chart. If you see 52-week lows and long-term downtrends, move on to the next chart. Don't even think twice about it.
Excellent advice. Hey, Arthur, we have a few questions before the 10 and 10 for you. Do you mind?
Sure.
One that actually is right now the most popular question and item in the entire chat room, and it's not a 10 and 10, it's a question for you. Please give your thoughts on oil after this latest gyration.
On oil, well, I just happen to have a USO chart right there.
Read my mind, or they did.
So I did feature oil. You know, I have a mean reversion strategy, and it's based on RSI moving below 30 and coming back above 30 when the long-term trend is up. And this is a mean reversion setup in oil that was taking place in early July, but it couldn't quite get off the ground here. And so I would say that I would say that it's failed at this point because you have this advance that now looks like a bear flag. All right. We've broken below that flag line, and it looks like oil's going to move down towards this next support zone. If we look at the WTI chart, that would be probably somewhere in the low 60s for oil. This, of course, is an end of day chart. It won't be updated till after the close. So it looks like we're going to get a breakdown there. But the fact that we're getting a breakdown, I think, means the mean reversion is not working this trade. So we'll have to wait for the next setup in oil. The long-term trend is still up because, I mean, this is a 52-week high. But I think oil is going to be subjected to some more backing and filling here. It was interesting. Last night was, of course, the beginning of the World Cup. And I don't know if you looked at some of the photos, but Saudi Arabia played Russia. And so they showed pictures in the private booths with the nice big plush red chairs. And there's the Saudi prince with the FIFA chairman. And on the other side of him was Vladimir Putin. And you could see them giving fist bumps to each other early on. Russia won 5-0, but who knows if some oil deal was negotiated up there or not. I don't know. But you know, they're two of the biggest oil producers in the world. So
yes. Okay, I'm going to give you a really quick question because we got to get into that 10 and 10.
Okay.
But I think I hope everybody's gotten enough off of your chart here. Let's see. How do you get your top holdings percentages and on your ETF charts? And if I recall, it's a manual input, right? You looked it up on their site?
Yeah. So what I'll do is I'll just go to, this is the SPDR's website here. And I'll go to the Fund Family website. And this is SPY, but say if I want XLF, I can type in XLF, and then I can look at the holdings there. Of course, they make me click 3 times to get to them, but
of course.
yeah. So there you can see the top holdings for XLF, and all of these are going to be very heavily weighted towards the large caps. And it's interesting to know because you need to know the drivers in each of these. If you look at XLE, you know, ExxonMobil and Chevron are, look at that, 40% of the ETF roughly, those two stocks. The materials SPDR, XLB, it's like 23% Dow DuPont, I think, or 25%. So if you're, you know, interested in those ETFs that have these big weightings, you need to know the drivers.
Right. I know that Tom talks about that a lot with, you know, ExxonMobil, Chevron, you know, being, if you want to buy this, you need to be pretty excited about those two stocks. Because
yes,
they're a third of the whole XLE. So
absolutely.
okay, well, I think we should move on into the 10 and 10. But here's the summary of what Arthur talked to us about. I will certainly put this in the Market Watchers Live recap this afternoon. So you'll want to go there if you want to look more about what he talked about. Here is your summary. All right, I'm going to go ahead and grab the screen for just a moment, and then I'll have you take it back.
Okay.
But I wanted to look at our RRG so far for all of the requests that I have been able to put in right now. And what I wanted to show you mainly was just what kind of sectors people are requesting. It wasn't a lot today. I take that as a good sign that people were listening to us. I only had 25 versus like 42 requests. So that was great. But now those of you who got those in time, there's a good chance you're going to see your symbol. So let's go ahead and pass it back to you to do the myelin.
Okay, I will grab that. So we're going to start off with MYL. And I believe this is the generic drug maker. Now, what I'm going to do is I'm going to just put 2 indicators on all of these charts. I want one of them for the long-term trend, and I'm just going to use a 50 200-day PPO. And when you put a 0 for that last PPO, that puts it as a histogram, as you see that 0. So you get a nice histogram. And basically, if you look at the PPO, you can see it's flirting with 0. It's just positive, it looks like there. So myelin is on the verge of turning into a long-term downtrend. And what it looks like is you'd have a trend line here and a break, and you're trying to break out here, but now we've failed. And basically 38 your last line. You break 38, and I think myelin is headed to new lows. The 50-day will be below the 200-day then. Okay, next.
All right, the most popular stock in the chat room is actually one of the most active on the Dow right now, GE.
You know what my answer is going to be on this one. Don't even have to look at the chart, do we?
Oh, come on now. It's getting close to support, right?
Well, I have a theory on support. In a downtrend, there is no such thing as support because you expect lower lows. And conversely, in an uptrend, there's no such thing as resistance because you expect higher highs. But yeah, you can make the case for support and maybe an inverse head and shoulders pattern here, but it needs some sort of confirmation, some sort of a decent breakout, you know, before you can look at GE, I think. So, you know, here's where I draw that inverse head and shoulders possibly, and you get the breakout. And once you get the breakout, I don't think that's necessarily the buy. I think you put it on your list then, and you look for the successful pullback and broken resistance turning into support type thing being a pullback. So maybe a breakout surge to 18. You're like, okay, geez, turn the corner. Now I'm going to look for it on the dips. But I don't think now would be the time.
Okay.
Okay.
Next one up I'm going to give you is DHR, Danaher.
Okay, Danaher. I did feature Danaher on Tuesday, and I am bullish on Danaher because what I see is a bullish continuation pattern developing. You know, you see a flat line across there. That's the resistance, boom, boom. And then you see some higher lows taking shape. So buying pressure is coming in at higher places, and that's an ascending triangle. And that's a bullish continuation pattern. And so you could measure the height of that pattern, and it's about 10%. So if we break out at 104, we would target a move to around 114. And this is a conglomerate. I think it's listed in medical devices, actually. That kind of surprised me. I know they have a lot of medical businesses, but they are listed in medical devices. So I would be bullish on Danaher.
Okay. Let's see, the next one I'm going to give you is, let's see, one of the industrials, CSX, railroad industry.
CSX, okay. So yeah, this one definitely looks bullish. And if you're not sure what, you can click that full quote button, and then you'll get all the information you need about the stock. And you can see it's industrial, it's a railroad, so it's going to be part of XLI, it's going to be part of the Dow Transports, and it's looking definitely bullish. I'm not even going to guess if it's overbought or not because there was a breakout, there was kind of a little flag. It's just working its way higher. So there's nothing more to do here but watch it and wait for the next opportunity.
Okay.
Okay.
All right. Next after that is MetLife, MET.
Okay. And didn't they do the Charlie Brown commercials back in the day?
Yes.
Yeah. The Great Pumpkin, and it'd be sponsored by MetLife, I believe.
Yes. Oh my God. Aging ourselves watching those on regular TV channels and not on the internet.
Yeah, exactly.
If you missed
So,
it, you missed it.
yeah, no kidding. No kidding. Charlie who? So, yeah, MetLife, I can't get excited about it because, I mean, do you see an uptrend here? No, you just see a flat thing going on here. And the 50 days below the 200-day, and it's got this big gap and breakdown. The only thing that would get it out of its funk here maybe is a break above 49. But there's so many stocks out there. If you're looking at this chart, if I was looking at this chart cold, I would just say pass and look for something that looks more interesting.
Okay. The next one, and it was, remember, I don't know if you remember at the beginning of the show, but consumer staples sector was leading, tobacco in particular. So how
Yes.
about a look at Philip Morris?
What's their symbol again?
PM.
PM. Okay.
Yeah, you're like me. You don't know all of Tom. He knows all of them.
I was going to put in MO in the beginning, the old symbol, but
Right.
so yeah, this is another one. Pass. I'm not a bottom picker. If the name of the show that I do on Tuesdays is called On Trend, and this one is not on trend as far as I'm concerned. Could it have an oversold bounce? Yeah, it could. You can see that resist support zone and that gap. Whoop, I'll put on my rectangle. All right, that's your support, and that's going to turn into resistance on any bounce. But yeah, I would just move on and look at some of the other stronger players because you need the trend on your side.
Yes, absolutely. Yes, momentum traders. That's what Tom and I talk about. All right, let's see. Only one from the energy area, Apache, APA.
APA. Oops. Okay, so there's still an overall downtrend here. If you draw from the left to the right, that line is sloping down. I'll color it red since it's sloping down. Yeah, this one just looks a bit too messy for me, but you got a uptrend working since March. All right, so you got that in your favor. Definitely a 3 to 4 month uptrend working and pulling back within that uptrend. Breaks 38, then it's back down again. Okay.
Okay, let's look at Alibaba.
That is ABBA.
BABA, Baba.
BABA.
Not ABBA.
Baba. Not.
That's the singer.
We got to stop dating ourselves, huh?
I
Gee.
know. That's actually my ringtone.
No way. Which one?
Oh, Dancing Queen.
All right. And so it goes off in a restaurant and everybody starts dancing.
Oh, well, I usually have it in silent.
Okay.
If I'm in a grocery store, because that's, of course, when I have it on loudly, oh, yes. A lot of the moms look at me and kind of give me
So
the
Baba
high
is
five
looking good. Baba's looking good. I had that little so if I hit a control or command D, yeah, there we go. I get a little flag. So basically it had a wedge correction, it broke out, consolidated, and now it's breaking out again. So I think Alibaba is going to do is a good stock. It looks better than say General Electric or Philip Morris to me at this point. And I heard rumors that they have Alipay now and some Starbucks in New York.
Oh,
I mean, that's the craziest thing I've ever heard. That they've got a payment system that they're starting to roll out. So a lot of things happening there with Jack Ma and Alibaba.
yeah. That's very interesting. All right, let's see. The next one I have for you is going to be DJP. And that is, let's see.
Oh, that would be that's the commodity ETF.
Yes. The iPath one. Okay, that's why.
These things, the CRB index and these, go look at the holdings. And I'm pretty sure that 50% is from the energy complex.
Mm-hmm.
And so the majority of this rally is built on oil. All right. Now, not knowing what it's made of, the trend is definitely up here.
Mm-hmm.
All right. There's definitely, a series of higher highs and higher lows working there. And we can see that RSI has moved below 10. So we're getting oversold for the third time. So oversold back here a year ago. But basically, you get oversold and it turned up, oversold, turned up, but didn't last. So now we're getting into a zone that might offer support, but you're probably going to have to watch oil closer for this one to see when oil might find support and turn and catch the turn here. But that's the way that chart looks by itself.
Okay.
An uptrend, short-term oversold.
All right. And the final one is going to be, drum roll, PSCC. And this is the Small Cap Consumer Staples ETF.
Oh, wow. So this is a good one to put on the price relative. Let's see. Instead of getting too many indicators, but we'll do XLP, PSCC, and you'll see that PSCC is just running away with it. The opposite is XLP is underperforming. So XLP was hitting new lows back in May, and PSCC was already breaking out. I think it's too thin to trade. I don't think the volume's there, but it's definitely one of the leaders. And that kind of goes to, it's a small cap, and it's also in a sector that started to rebound over the last week or so. And it's hitting a 52-week high. So if you're looking for individual plays, you might go to the small cap consumer staples sector using the sector summary at StockCharts.
All right. That completes the 10 and 10 to 1. So here is what we looked at, all the symbols. And I'm sure that Arthur will get those to me right after the program. So I will
definitely, I will get them. There's the sector summary. And once you go here, you can find all of the stocks within these sectors. And you can find small, large, and everything.
Awesome.
Okay.
Sounds good. All right. So let's go ahead, and I'm going to start us back up here. Okay. Having my own little computer glitches. Okay. I am going to move to sentiment a little bit later, but I want to go ahead and talk to everybody very quickly. And you mentioned it earlier about ChartCon coming up 2018. It is streaming live August 10th and 11th. And I did just hear we added another speaker to the agenda, and that would be Mary Ellen McGonigal. She was a guest on our program, and she also has a show on our StockCharts TV as well, which is, I think they call that the MEM Edge. So she's going to be joining us at ChartCon 2018, and we hope you will join us via your workspace, living room, boat, whatever, car. If you have Wi-Fi, you can come and join us because it is streaming live August 10th and 11th. To get more information, stockcharts.com/ChartCon. Okay, we didn't get a chance to do chart breakdowns, but I usually don't take too long to do the sentiment. So Arthur, if you want to, in the background, get ready for a couple of those chart breakdowns, because I know you actually had a list. Mine was going to be a little more on the fly. So I'm going to go ahead and I'll do the sentiment. And then when I'm done with that, depending on our time, we can move on. Maybe you could do a few chart breakdowns until we get into the end of the program. All right. Okay, we're having a little bit of difficulty with intraday data right now. So I thought I'd look at a little bit of a longer, a 5-day chart so we can just get an idea on some of these where we're going. But yeah, I don't know why that's wrong. Huh. Okay, in any case, the Dow we have, of course, is much lower on the day. We're now reading, under that 25,000, just like we got in that predefined alert at the beginning of the show, and it is continuing to hover below that. S&P 500 is trying to make a comeback here, trying to get back up to the gap down open, but we're still looking at a decline of 8.77 points. Nasdaq is, really when you look at it in terms of the last week, moving mostly sideways, but we can see we're starting to get a little bit of a move up and starting to make some intraday highs, despite the fact that yesterday, we were lower. All right, mid caps also gap down and, getting back up toward that open of the day, but still lower. We can see Russell 2000 is also lower on the day. Again, when you look at these 10-minute bar charts, though, over 5 days, you can see we're still, in a trading range mostly for the Russell 2000. When you look at the TSX, and we can see that it is also lower on the day. USO really having a difficult day, so it was a good to hear about what you were thinking about it, Arthur. And gold and UUP. So we have UUP is lower on the day, and right now actually reading mostly unchanged. GLD gap down and has been continuing lower on the day. And considering gold, the dollar hasn't really done much. This indicates we are seeing some selling pressure for sure going on in gold. It's not just necessarily the the correlation fact that generally when UUP or the dollar goes up, you see gold move lower. TLT is slightly up on the day, reading 120.50, and the volatility index is still quite low at 1225. So let's go ahead and get started with the sentiment report for this week. And here are the list of the various sentiment indicators that I have in my own chart list. I did want to look very quickly at the Wall Street Sentiment Survey. And the reason I wanted to look at this one was because you all somewhat contribute to this. We do ask in the poll whether you believe that in the following week the market will close higher or lower. I turn this information into the Wall Street Sentiment along with Tom and my vote for what we think is going to happen next week, and they tally it all up and we get to see what's going on. And you can see as far as this week, we did have a preponderance of bulls. We were looking about 50% bullish at the time. So, our bull bear ratio as far as Wall Street sentiment goes is elevated. We're certainly seeing the trend moving toward that bullish area. And again, when people are very bullish going into a week, there's a very good chance you're not going to see the kind of upside movement that you want. All right, let's go back to what we normally start with on our sentiment report. And actually, I'm going to make this a little bigger. All right. So this is the 10-day moving average of the put-call ratios for CBOE, the equity put-call ratio, and the OEX. And so what I look for, of course, are those overbought, oversold readings, those readings that are unusual, top or bottom. And so what I was looking at with this one, and I'm going to actually annotate it for you just a little bit here, because right now we're looking at some very very low readings. In fact, we're getting very low, even more low on the equity put call ratio. We're seeing some lows we haven't seen in quite a while, since early 2018. So when you get especially low readings, that means investors are very bullish. And when investors are very bullish, that is very bearish for the market. So what I do is I try and look at where we were getting those same types of readings. And typically when you get these very low readings like this on those put call ratios, you are now vulnerable to some downside action. And you can see that when you look at when these two had bottomed previously from that low area. We went into, of course, that horrible correction. We experienced more of that with that second corrective decline. And again, you can see our readings were pretty much on par. Now, I'm sure people will point back to 2017 and say, well, those low readings didn't really amount to much, but some consolidation. Well, we were in a parabolic rally, the beginnings of one. And so to me, the sentiment and all of that, when we were getting these, when investors were getting very bullish, that still was bearish for the market, but it ended up turning into more of consolidation than anything else. Okay, so let's look at the AAII investor sentiment, American Association of Individual Investors. If you go to AAII.com, I believe you can vote in this particular survey. And as you can see, we have elevated readings here on the upside, very bullish readings. You can see we don't get readings this high very often. And like I said, I always mark out when we have what to expect. So you can see when we've had some of these especially high readings, it generally doesn't end too well because people are just getting very too bullish, and that generally means you're going to see a reversal. But what I really wanted to point out on this chart is the bull-bear ratio, because it's now over 2, meaning there's over twice as many bulls as bears. And that is very bearish for the market. That means we are seeing excessive bullishness right now. This was the one that kind of blew my mind today. This is the one Arthur heard me oohing and aahing about, because we just got the 3rd highest historical reading on the NAAIM exposure index, and that's the National Association of Active Investment Managers. So these are the kind of the big guys and how exposed they are to the market. And we have seen some very high readings. We saw the highest reading back at the end of 2017. But this is the 3rd highest, coming in just below this reading we had back in 2013. Now, we have been tracking this since 2006. So, we're not talking a 30-year historic high reading. But still, this is really interesting information. And as I said, I usually will mark out when we get these very high exposure readings. And one of the things you'll notice, especially back here right before that parabolic move, a lot of times you might see a little bit of upside after we get these very climactic readings. And mainly because, these are kind of the smart investors, I guess, if you want to, the smart money. This is the big movers and shakers. And so when they do expose themselves like that, they have their finger on the pulse. So a lot of times you might see a little residual after this because they are so exposed. But once all the money's in there, that's when it's time to be a little concerned. And you can see that when we get these very high readings, it generally doesn't end well, especially when we got these readings back in late 2017. Like I said, we got a little residual upside because, again, parabolic rally, but it was followed pretty quickly after the exposure was immediately pulled back to corrective mode here. So while these excessively bullish readings on the NAAIM can be an issue because, again, you're talking about highly bullish behavior, the big money guys, they're not simple investors just taking a poll. This is where their money actually is and how much is out there. So, they're not going to expose themselves too much and get burned. So, but it is a good sign to look for in what you're doing as far as sentiment readings go. All right, let's look at the RIDEX cash flow asset ratio, I'm sorry. This is the handful of funds that Guggenheim has. They adopted them from Ridex when they took over. We still call them Ridex because it's just easier to think about that basket, and that's how we named these indicators, obviously. So what I'm looking at of this basket of funds, we track the assets in the bear funds and the bull funds, as well as the assets in the money market fund. So watching where the money goes in this way gives us a really good feel for how bullish or bearish the market is. This isn't a poll. Somebody raises their finger to the wind and then just says, yeah, I'm bullish, kind of like we do with our polls. This is where the money is actually moving. So this particular sentiment chart is, I think, really useful and important. So as you can see, we're hitting some very low, I would say, exposure to the bear funds. A lot of money has moved out of the bear funds this week, and we are seeing money market funds slowly coming out as well. And look at the nice steady increase in the bull funds. We haven't reached some of these levels, asset levels that are, in that top of the range here. That's why I wanted to put that in there. So there's still room for that to move higher. But in general, looking at this action that we have right now, you can see with our Ridex ratio that we're now getting ready to hit and come back over some of these highs that we had before, but we're not quite there yet. So when I look at this chart, I see very bullish investors taking money out of those bear hedge funds and moving them into the actual equity funds. So as a conclusion to my sentiment, and I think that'll leave you just a few minutes, Arthur, like 5 minutes to maybe go through a few. I'm going to put these summary charts, this summary chart in the Market Watchers Live blog. But overall, as far as my conclusion, sentiment is very bearish right now because we have a lot of bullish investors, a lot of high exposure to the market right now, and that as well as the bullish polling. So I would say sentiment is very bearish. It's telling us to expect some more downside going into next week. So my vote for next week is going to be that the market will be closing lower. So you'll have to give me your position. What do you think? S&P 500 close higher or lower on the week, or maybe just mostly unchanged? Arthur?
Okay, so I will grab.
Yes. And well, what say you? Are you thinking the market will close higher or lower next week?
I think the market will close lower because I think we're into this corrective period.
Yes.
So I'm going to put lower.
All right. Man, it's nice to have somebody agree with me. Tom almost never never agrees with me on that poll. He's almost a perma bull. Although last week before he came in, we did agree on mostly unchanged over the week. So, all right, go for it.
Okay, so breakdowns. Here's XES, the Oil and Gas Equipment and Services. Now, it's okay. Yeah, broke below this support level here. I was looking at it here when RSI had dipped into this 30 to 40 zone, because RSI doesn't give you like a move below 30 every time to say, hey, I'm oversold. Sometimes it just goes down to the 30 to 40 zone and doesn't get below 30 and then turns up. So when it comes down to that 30 to 40 zone, I'm on alert, all right, for a potential bounce. And I was on alert here because we had retraced 50%. We're in this consolidation area, which marks support. And we had a bounce that failed. We had a bounce and that failed. And so now we're down to the next support level. And this is the challenge sometimes because there's always another Fibonacci level. There's always another support level. And if you look at XES, man, it likes deep pullbacks. I mean, look at this advance and look how deep that pullback was. And you basically had a bear trap that set it all off. But I'll still be on alert as we approach this, broken resistance turns support in the 61.8% retracement, and RSI actually moves below 30. But you got to watch oil because there's a pretty good correlation between XES and oil. And here's one of the bigger holdings, Schlumberger. And it looks like Schlumberger had a little, in hindsight, a little rising flag here and broke that flag. So it's kind of back to the drawing board and let things settle down a little bit here. But, you know, this, I thought I was looking for a bounce here as well, and it's failed on me. And we've had to move below the 200-day. Doesn't mean much because you've been above and below that 200-day quite a bit. But this is a battle zone here. So I'll still be watching it, but my initial impulse has failed. And then I've got 3 finance-related charts that are in downtrends, and this is what's weighing on the market. And somebody asked if I thought it was the yield curve, and the short answer is no. I think it's more to do with Treasury yields on their absolute basis than the yield curve. Because you look at regional banks, they're doing okay. And it's these big banks that have some issues. I don't know what the issues are, but JP Morgan's still in a decline and needs to break out. So it's still broken, if you will. And if something's broken, you know, move on. There are other things that are not broken, like a lot of these technology names that I showed you. You know, go with the relative strength. Here's Morgan Stanley. Lower lows, March, May. And then here's Goldman Sachs. You know, maybe that's a big double top or something. And you broke down, had a little bounce back and a lower low. So if Goldman Sachs can't go up, that's really bad for the finance sector. I wouldn't bet against Goldman Sachs. Don't get me wrong. I'm not going to go out and short Goldman Sachs. Never in a million years. But you need to get a breakout at 245 to get Goldman back on track. And until these banks get back on track, I think these are broken charts. And so I'll give it back to Erin.
Yes, let's go ahead and close this out.
Okay.
Like I said, so you're going in next week is neutral. No, you're going in that the market will close lower, as will I. I'm just going to take a quick visual of our poll to see where people are. And hey, we may have gotten a few people to change their minds or their votes. This is the first time I can ever remember that the poll is showing 54% lower. Lower is winning. You guys, all of you tend to be perma bulls when we do these polls. We'll have to see if this sticks by the end of the day when I give our votes for the Wall Street sentiment. So certainly put your vote in.
If we're true sentiment people, we're going to do the opposite of this poll, right?
Yeah, exactly. Well, no, sentiment is bullish. That's why I went in bearish. So,
okay.
Well, Arthur, it's been great to have you here today. Really enjoyed you co-hosting. I hope to get you back the next time Tom is gone. I'll tell him he needs another vacation because I'd love to have you back.
Okay, well, great. Good to be here,
The
Erin.
weekly schedule is printed right there. And I just want to thank all of you as well for being with us today. And, you know, please remember to complete that survey as you exit. It's right below the viewer if you're watching us StockCharts TV from the tab on our website, because we love to get your does air 5 days a week, Monday through Friday from noon to 1:30 p.m. Eastern. Have a great afternoon, everyone, and we'll see you back here tomorrow. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.